In a quarter wherein revenues were in line with estimates, Tech WABAG saw strong debt reduction, over 10% EBITDA margins, which are a surprise compared to estimates, and a focus on securing tech-focused orders, which, according to brokerages, are a key positive. Let's get in Mr. Rajneesh Chopra on today's episode of Talking Point. He's the head of the global business at Tech WABAG to talk about what went right in the quarter, what didn't, if anything, and how would the quarters ahead look like. Mr. Chopra, good having you. Hope all is safe.
Absolutely, Neeraj. We are all safe, and a very good morning to you.
Yeah, same to you. Let's start off with the revenue growth numbers. YOY does look that there was a slight slippage of about 6% quarter on quarter, about 9% sequentially, but revenues or sales largely seem to be in line with estimates. Would you have hoped for something better, or in COVID times this was about it? And as the COVID situation eases, do you believe the revenue run rate can start showing some pickup?
Yeah, I think you are absolutely right in talking about the revenue growth. Probably we could have been maybe 40-50 crore plus, for the last quarter. But if you see 9 on 9, if I look at 9 months, compared to last year's 9 months, probably we have a decent growth. It's a double-digit growth of around 13%. So we have been growing, and I don't think it's a surprise for anybody because we have a strong order backlog. And as I said, even in my last interaction, in both the COVID years, we have learned how to live with COVID and work towards our objectives. Now, going forward, since the order book is strong, I think even in this quarter, we will definitely exhibit growth. And year on year, as I said, even in the past, I think we'll definitely be growing in this year. We have not given any predictions, so I may not be able to give you any numbers, but the current trend indicates definitely the growth will be a double-digit growth.
This is for FY22 you're talking about, right?
Okay. Yeah, I'm talking about the year, the current fiscal year.
The current fiscal year. Okay, I'll come to FY23 in a moment as well. But first, what to my mind was a standout feature simply because most of India struggled with their EBITDA margin performance. You came in at 10.2%, up both QOQ, YOY, higher than what was estimated. I reckon despite commodity and component costs moving up, what happened? I mean, what went right this quarter? And is this sustainable?
I think it is definitely sustainable. First part, maybe your later part is that it is sustainable. The thing is, if you would have seen our numbers, probably we have a much better control over the TCOs compared to the past. That's one factor, because maybe during the COVID, we consciously worked on, reducing our TCO, and that is definitely aiding the margins. Number two, in terms of our interest cost, definitely it's lower compared to what it was for the same period last year. And third, and the most important part is, we are more focused on technology, EP orders, and which does not have the construction component, especially in new geographies and some of our overseas geographies, which is aiding our margins going forward. So both in terms of revenue realization, the time frame of realization, as well as in terms of our cash flow and EBITDA, I think these change in the order mix is something which has helped us in the recent past. And going forward, all our orders, if you would have seen, whether it is our ASEAN, which is around $100 million USD order for desalination, it's EP. We backed an order 6 months back from Russia, which is around 12-30 crore. Again, that order, if you see, it's engineering and procurement. We got an order from Petronas for a wastewater treatment plant, small one, but even that is EP. So maybe it's a conscious decision to focus on our core strengths, and that is engineering, procurement, and technology, which will definitely going forward aid our improvement of margins.
Okay, so 2 questions rolled into one. What percentage of your current or total order book are these newer, higher margin orders? And I heard you use the term twice that this will aid the margins going forward. Safe to assume, therefore, that from the current starting double-digit margin number that you've clocked in for Q3 in the quarters ahead for FY22 or 2022, the numbers could at the very least be 10.2, 10%, and could even inch up to maybe 11, 11.5?
See, I will not be able to comment exactly on the number which we'll be able to achieve.
Okay.
But if you look at our recent order book, right, we, in first 9 months, we have, total order book of 2,800 crores. If I take, the three major orders out of which I just mentioned, one is from Malaysia, other one is from UAE, third one is from Russia. All three are high technology component, E and P. And all these three are contributing more than 2,000 crores of the total out of 2,800 crore. And all I can say is that, yes, we have a strong order pipeline. We hope that we will be able to strengthen our order book over the next 3 to 4 months even further with these kind of orders.
Okay. And I think the order inflow number looked pretty strong, right? I think, if I'm not wrong, about 2,800 odd crores. Well, the notes that I read seem to suggest that maybe close to 4,000 crores for FY22 and maybe even higher in FY23. You may not give the exact numbers, but on ballpark, are these reasonable estimates?
I think definitely, as I said, we are at 10,000 crore order backlog. We hope that by end of March, it will further improve. And going forward, I think we are definitely targeting a double-digit growth in terms of our order book as well. So you will see that over the next year, probably our order backlog as well as our order inflow, we should register with COVID taking a back seat and a lot of traction happening, especially in the Indian context. I think we definitely hope that we will have a double-digit growth as far as order intake and order book is concerned.
And even if the two of the three large orders are in oil and gas, does this government focus on the capital allocation for water? How you in the past stated that river cleaning itself can be a multi-year opportunity. Do you reckon order inflows from that segment could start coming? I mean, are there any kind of conversations there? How hopeful are you of converting some of those?
Yeah. I think, Neeraj, we are very, very confident about all these announcements which have been made. I think we have Nal Se Jal, we have, this Amrut 2.0, which has an outlay of around 2.7 lakh crores. We have Swachh Bharat Mission 2, which is again around 1.4 lakh crores. So all put together, as far as the government contracts are concerned, you will, going forward, you will realize that the traction will happen. And I think one of the major drivers is that, this SDG 6, Sustainable Developmental Goal 6, which talks about, water and sanitation for all. And India is also a signatory to that. So all these announcements and, the huge outlay of the budgets, which has been rolled out by the government, I think going forward, it will only pick up pace because we need to achieve all those targets. So we'll find the traction, and being a market leader, I'm sure, we'll be able to corner either our market share or maybe a little more than that, given our core strength in terms of water and wastewater management. The other driver is going to be desalination. I think this is something, we have been talking about in the past. And now we see that most of the new projects in the industrial sector also, which are coming, they are talking about captive desalination. Whether it is oil and gas, whether it is, your metals and mining, if it is in the coastal areas, everybody is talking about desalination. And of late, there has been a lot of focus on green hydrogen. So we have started getting a lot of inquiries for desalination plants, for these green hydrogen projects, because water is the raw material there. Everybody wants to go to a coastal or other desert areas. So in these areas, water is available either through ocean or, deep bore wells where water is brackish. So we find that that's going to be another trigger for our desalination business. In industrial sector, we find that everybody is, now talking about ESG, that is the in thing. People are consciously making efforts to, be more compliant there. And that's leading to a lot of new inquiries coming in terms of recycle and reuse of water within the industrial sector. So these are a few triggers which are external, but we feel that it is only going to help us, grow faster over the next 4 to 5 years.
Interesting. So, okay, can I probe a little bit on the desalination piece? The slightly longer term opportunity size, if you can dwell upon it, and the slightly near term Chennai desalination project, which I think the tender size is large. And the reason of course, it's anybody's guess, because I'm presuming there will be 3 or 4 bidders, including yours, which are pre-qualified. But I think most people anticipate that because you've got a track record of sorts of winning these projects in that region, this might, if this happens, and hopefully it happens for you, then it could be a bit of a game-changing event of sorts. Can you talk a bit about that in the near term? And can you give us some sense of the opportunity size on the green hydrogen bit and the desalination bit for the slightly medium term?
So as you mentioned about Chennai, we are one of the 4 pre-qualified bidder. It is probably the largest desalination project in the country. It's around 400 million liters per day. So being one of the pre-qualified bidder, the tender is out, and the current status is that, the pre-bid queries are going on. We hope over the next 2 quarters, the bid should be finalized, or maybe by mid-year, the bid should be submitted. And once the bids are submitted, I think this is a global tender. There are 4 major players. And after that, we are pretty confident that we should be able to give a competitive bid. And if we are L1, definitely we'll back this order. As far as overseas is concerned, you would have seen that recently this 750 crore order, which we got from ASEAN. Again, this is a desalination component. Now, as far as green hydrogen is concerned, we have been trying to map it ourselves, because currently I don't have any data coming from any reliable source. So we are trying to map it. And I feel that over next 2 to 3 years, I can safely assume that around 2,500 to 3,000 million liters of desalination capacity will be required, in the geographies where we operate, only for green hydrogen. So this is going to be one of the major triggers which is going to help us. And as you know, we are already rated amongst the top 10 desalination companies in the world.
Wow. So how much does it translate into, say, $1 million or rupees crores, this size that you spoke about in the areas that you operate in?
I think it should be around close to $3 billion plus. Only it's coming from this green hydrogen.
Wow. So between 15 and 25,000 crore rupees, roughly.
Yeah.
Wow.
It will be 20,000 crore plus, I mean.
10,000 crores plus. Okay. Okay.
But then I'm not talking about only India. I'm talking about India and overseas geographies.
The geographies that you operate in. Yeah. Perfect. Point well taken. Okay. And this is, I presume, over multiple years, but still it's a large opportunity. Two other questions before we wrap up, Mr. Chopra. One is on the debt reduction and sizable debt reduction. Take us through the curve, if you will. Tell us how it could look like mid next year.
Yeah. See, I think reducing debt and ultimately again going back to a debt-free something which we all are targeting. But I think with the growth in our business, if we are able to maintain a double-digit growth, and if we are able to, as we demonstrated, and we hope that we'll be able to improve our margins, I think maybe it's a question of a year or 2 before we are back on track. And our ultimate endeavor will be to be debt-free over the next 2 to 3 years.
Over the next 2 to 3 years. Okay. And last question. I mean, I don't, excuse me for not knowing the status. It's a conversation that we had maybe 3-4 quarters back, but some of those pending amounts that you are due to receive from various government bodies, is it status quo still?
See, it is not status quo. There are 2 parts of it. One is Telangana Genco, PS Genco. where, there was a case put by one of our consortium partners in the Supreme Court. Now it is back to the arbitrator at a local state level. So now we hope that the decision will be much faster compared to a normal, legal process. So definitely we feel that we should be able to recover those monies over a period of time. But again, whether it's arbitration or it's a sub judice, it becomes difficult to predict any time frames. And as far as AP Genco is concerned, I think we are still, hoping that once some payments are released, there is some balance work which we have finished. But that's where we will be able to move forward. But as of now, we are not in a position to give you any time frames by which it will come. But one positive thing is, yes, that definitely remains on our balance sheet as a receivable, which has not been moving. But if you see our core business, which is water and wastewater management, in spite of that being there, it's been continuously growing over the last 3 years. So now our major growth is on our core business, which is water and wastewater management. And we are confident that we'll be able to maintain a double-digit growth over the next few years.
Wish you all the best for that, the receivables and more, and pretty strong commentary on the margin front, Mr. Chopra, which is very heartening. Thanks so much for joining us today, and all the best for the quarters ahead.
My pleasure, Neeraj. Thank you so much for having me.
The pleasure was ours. Viewers, thanks for tuning into this edition of The Talking Point.